All right, what's going on, guys? Welcome to another trade recap. Today, we're going to talk about the market for CPI, which I'm sure you guys take advantage of and were able to pass some accounts. I know I did, but without further ado, let's get straight into it. So, on our higher time frames today, there wasn't really much of any confluence to really go off of. Neither, the 15 or anything like that. Today was honestly more, clean structure on the lower time frame as opposed to the higher time frames. So we'll get straight into it. So let's actually go on a 5 minute chart. There really wasn't anything, like I said, on the higher time frames for me. Today, my main focus was really on this data high. And then we had some internal highs, but overall would have been this 4 hour gap fill for higher price. So we'll kind of get into what I saw for today. So here is your market open here. And you could see right off of market open, we come down, we take out this CPI low. So this is your low of the 830 candle. We could see we immediately come down and take out that CPI low. Now we start to see price kind of, give off a, decent reaction from that. It would be somewhat safe to assume that we are going to, end up moving for, the data high at that point. So I'm sure some people today may have taken, a continuation, somewhat like maybe something like this here, and just, maybe tried to run very tight stop into the CPI high. You might have just had a very tight stop here. Or, you might have gone break even at CPI high and held runners. For me, I kind of, didn't really like this setup much. We'll kind of go here on the 5 minute. I believe there was a 5 minute gap, if I'm not mistaken. Yeah, so there was a 5 minute gap right here, right? And, ideally, we want to see that 5 minute gap, flip in order to confirm that, we're going to see higher prices. So, basically with that, we come up here, we get a strong 1 minute close, but the 5 minute fails to close. And then you could see after this candle, we end up printing lower. Now, at this point here, CPI low was taken. So I was kind of, wanting to see, if we got some form of continuation into this range low here, right? So that range low there was kind of, the would have been like the most obvious draw, and also would have been the final draw that I would have taken short, unless we just, saw a run of this draw and then a continuation into London and, these other levels marked. But, once we're up here in price, when I'm seeing we're all the way up here in price, I'm not really anticipating that we're going to just, free fall for London. I'm kind of more so thinking we're going to come down and manipulate these lows and then, end up coming back up for the highs. So I kind of waited to see what this 5 minute gap would do. And then ultimately we could see that it ended up holding. So I took an entry somewhere here. Go ahead and mark it out. So I took an entry right here on this 1 minute, and my stops were, tight, protected by this 1 minute order block here. And the reason why, I decided that this was a valid entry here is simply just due to the fact that, we can see price showed, didn't show willingness to go higher at that point. And then in this area here, when we had this kind of move up, you can see, we're pretty wicky in price. The other thing too is this is right off of the open. So you do want to understand that you can easily get manipulated out on this kind of a trade. And you definitely want to see more confirmation in price. You can also notice around this area, we weren't fully correlated with ES. ES was moving a little bit weaker here, wasn't moving, as strong at this point. So, one thing that I've noticed a lot with, all these trades that I've been taking is typically, when you see good delivery, you're seeing delivery when ES and NQ are correlated in their movement. So you can see here on this leg down, right? ES and NQ were, perfectly correlated on the leg down, and, both had that range low to target, right? So clear draw and clear correlation. So for me, I'm seeing this 5 minute gap is holding off of the open. I'm seeing that, we are refusing to really go higher for that data high. We're, still sitting weak, in price, and we do have that range low. So at this point here, I'm seeing price moving, not really seeing anything I like. Now, ideally here, this setup here down into that low, also somewhat decent. But like I said, I did want to see more confirmation out of price. At this point, we were only 3 minutes into the market. And, I didn't really have full confirmation that we weren't going to go for this data high at this point. Now, once we come down here and I'm starting to see price, in continuation towards this draw on liquidity, now I can kind of anticipate that, okay, we don't want to use this data sweep to go for the high. We're actually, closing below these lows now and actually trending towards this range low. So I basically faded this candle here, and I saw, we got like a slight retrace obviously on this, 1 minute bullish candle here. But this candle here was kind of what broke our range. So you'll notice a lot of times in price where we, reject a low, or we reject, a bottom and a top, you kind of want to stay out because it's low probability. You want to wait for price to confirm by, breaking to one side. So in this case here, you can see, we were rejecting this bottom here. And then you can see this candle here confirms, okay, boom, we've broken that, small range. And now that this draw on liquidity is now, in sight. So now I'm waiting for some form confirmation to enter. And so I see, we get this light retrace right here. And then I see right after we get this nice strong 1 minute candle close, towards the draw on liquidity, right? There's a good area to put a stop, ideally at this 1 minute order block. You don't want to see price trade back up above this order block if we truly want to go for this draw on liquidity. So that's where I entered. And then I ended up closing my trade for exactly a 1.51R. I remember because I actually wanted to hold for a better risk to reward as opposed to, a closer to a 1R. But as you guys typically know, I do just go for 1Rs, and I'm not really someone to go for like home run hits or bigger, risk to reward trades. But I think, something I'm going to be doing going forward is going to be, holding my trades longer if I have conviction and movement. Holding longer for, strict RR, holding for more extended draws and liquidity. Obviously, this can result in more break evens, a lower win rate. But overall, higher RR will allow you to, maintain that lower win rate. And I started off, my futures trading with reversals. Those are where my first payouts came from. We're trading reversals, catching tops and bottoms, and, catching 2R, 3R trades. But yeah, so as you can see here, we took this entry, and then we got, perfect delivery down, pretty much got no drawdown. I think, we might have gotten like maybe a couple points of drawdown max right here. Go ahead and mark this out. Let me see. Yeah, we got about 5 to 6 points of drawdown on this trade, and then ultimately just delivered. And then for this setup here, I kind of just went break even when I started to see this candle, displacing super heavy, this 940 candle. I ended up just moving my stop break even once I saw, displacement. Obviously, if we're strong, you don't want to see us just randomly retrace up. You're expecting us to slam through the draw nice and clean. And then, you guys will notice that, wherever I TP'd, right, we ended up using this low, and then ultimately we reversed back up towards the data highs. So now this trade here upwards was very, very valid. Why is it valid compared to the, this previous long here? I'll explain it. So let me get rid of this bracket here. But yeah, this is the trade I took. Very clean, simple continuation as, usual. Now let's talk about this long that you could have caught, after this short happened. So as you can see, ES and NQ are correlated perfectly right here at this point. And one emphasis that I do want to make, this is a little bit of sauce that you guys can end up using in your own trading, is that you don't always need an SMT to confirm a reversal. So SMTs are really good for confirmation, being able to have higher conviction that a reversal can happen. But you don't always need an SMT in order for a reversal to occur. And this is, one of those examples. So let's get right into that. So basically what you'll notice here is, ES and NQ both respectively took out the draw on liquidity, the range low, right? Now, the reason why this long becomes far better than, anything up here is because of this, clean V-shaped recovery, right? We come down, we manipulate through the lows, and then immediately after we start to recover, we start to V-shape and flip structure. So your entry here, right? You have this 1 minute fair value gap right here, and, we flip it very, very strong, right? So again, you guys understand that the ranges are wide. You guys are probably looking like, oh, you're going to have like a 90-point stop on this, or, a very wide stop. And, all you have to do in these situations is simply just lower your contract sizing. You should never, run different stop losses because of, the amount of points that it is. Your stop should always go where, the model needs it to go. So in this case, for inverses, typically I actually like to play my inverses like this. I like to protect the stop by this, middle candle that creates the gap, and just put it at the low of that candle. Typically you'll notice that, when we get a strong inversion that, is valid, we won't trade back down. If we trade back down through this inversion at this point, it invalidates it. So this is a good area to have a stop. So about a 70-point stop. And then obviously on this trade, your target is those data highs, right? So we have these data highs that, we're still unmitigated and are a very strong draw on liquidity. So if you guys are not aware, data highs and lows in the market are very strong draws on liquidity. Especially data reports such as CPI and like NFP. Typically we'll make a high and a low on the 830 candle, as you guys can see here. And then you can, frame trades to, the low and to the high of those candles. today you may have been able to scalp something into the data low. I personally didn't see anything worth scalping into it, but there was definitely, clean shorts after and then this long. So here's what your long would have looked like today. Very shy of a 2R, and you can see just perfect delivery, very similar to the shorts. And yeah, I mean, this is just valid purely because we come down, we sweep out this draw on liquidity. Keep in mind, we're also inside of this 4-hour gap, which we've, been hovering in for some time. But at this point, the 4-hour gap is still holding, right? When we come down, sweep this low, this 4-hour is now still validated. So this entry was good. I'm sure a lot of people took this today. This was a very, very, very clean entry. You could have taken a second entry if you didn't really, feel convinced by the inverse. You could have taken a, entry higher up here off of the CISD and this breaker block here. Obviously would have offered lower risk to reward, but would have been a much safer, higher probable trade to take. But yeah, I mean, overall, you can see here this inverse ended up playing out beautifully. This is a very strong volume candle, compared to what we see here. These candles are very wicky. They're not really decisive in direction. But in this candle here, I mean, we literally have no bottom wick. We print this candle, this next candle comes up, immediately prints up what? I believe it was like 90 something points, prints up 92 points. This is a very good, signal to take long. So, for me personally today, those are kind of the only, two trades I kind of saw that were valid. In my opinion, once we come up and we take out this data high, we've taken out this range low, conditions are, likely to worsen. The probabilities are likely to go down because we've taken out, major draws on liquidity. And then also, if you guys will notice, once we came up and took out data high here, you can see ES failed to do so. So we ended up having an SMT at this data high. So, pretty much in that case, as long as ES was below that data high with the SMT, you ideally wouldn't want to be longing into that. And then, you can kind of just see throughout the rest of the day, you can see price kind of just, grinded, right? We didn't really have any volume. You guys can see here, there's just absolutely zero volume. It almost looks like the market is closed. So yeah, today was just, one of those days where AM session gave a couple of opportunities. And then, once those objectives were met, then, it was better just to get off. But that kind of concludes it for the trade recap. I apologize for no face cam today. Just kind of wanted to just get this video out of the way. So not looking the most presentable for the face cam. But nonetheless, still going to get this video out for you guys. I have been slacking. I think I haven't uploaded a video in like about 2 weeks. As you guys know, last month was a pretty rough month for me trading wise. I pretty much churned through a few grand in evals, nothing crazy to be honest. Cause I don't just, blow through sets and sets a day. I'll usually just, if I blow a set on a day, I'll come back the next day. But I usually don't just burn and churn. But yeah, January was a red month for me. February so far has been off to a solid start. So we actually took those shorts that we took on 5 150K XFAs. We used CPI to pass those XFAs or pass those funded. And then we ended up using these shorts in order to build some buffer on them. So those are up around close to 1,600 each. Pretty solid trade on them for the shorts that I took. But yeah, as always, if you guys do have any other content that you're wanting to see in the future, be sure to let me know. I am going to try to be on top of these videos as much as I can. I know I've been saying that, but I have been in the works of, putting together some videos and putting together some content for potential mentorships that I'll be starting this year. As you guys know, a lot of people are running mentorships by just shilling you a bunch of recycled content. So I'm trying to kind of make something authentic. So it's taking a little bit longer than expected, but I should have that done hopefully by the end of the month, and then should be able to have some spots open up. So that's kind of where my focus has been at, that and trading, of course. But yeah, so I'll be getting that up and then uploading more videos as well. So if you guys do want to see anything else, be sure to leave in the comments, drop a like and subscribe, of course. And I will catch you guys in the next video. Later.